Currently, we are witnessing a unique historical event that occurs once in a millennium. The Federal Reserve, the world's most influential central bank, has begun facing financial losses since 2022. This is an unprecedented occurrence in our lifetime, and the rarity of central banks losing money is highlighted by the fact that the last instance of such an event took place in 1916. As of now, the Federal Reserve is projected to incur a $100 billion loss in 2023. Economists foresee a potential increase in this loss to anywhere between $100 billion and $150 billion by the following year. This situation raises numerous questions about how an entity empowered to essentially create money can face such losses. Did they venture into speculative pursuits like starting a gambling YouTube channel, investing in Coinbase IPO, or following Musk's lead by going heavily into Dogecoin? Actually, the reason behind these losses is tied to fluctuations in interest rates. Since March 2022, Jerome Powell, the head of the Federal Reserve, has been actively combating inflation. His approach involves raising interest rates, resulting in the federal funds rate reaching 5.3%. This strategy has brought about a dual impact. It has elevated the cost of borrowing money for individuals and entities, and secondly, it has heightened the interest expenses associated with the United States debt. As of the present moment, the national debt stands at approximately $33 trillion, marking the highest figure it has ever reached. This staggering number has sparked a debate within the field of economics regarding the appropriate course of action. Some economists contend that leaving the debt unpaid could render it unsustainable, potentially burdening future generations with its repayment. On the other hand, opposing economists argue that this massive sum largely involves the US owing money to itself, suggesting that it's more of an accounting trick than an urgent concern. You may be familiar with the statistic suggesting that if every individual in the US were to contribute to reducing the national debt, the amount per person would be around $98,000. Additionally, when considering only taxpayers or the working class, the figure would exceed $250,000 for each person. This statistic is often employed as a talking point to trigger frustration or influence voting behavior. However, it's important to clarify that individuals are not personally obligated to pay this amount. The explanation for this lies in the way the statistic is calculated, and it doesn't accurately reflect a direct financial burden on citizens. Within the $33 trillion national debt, there are two main categories: intra-governmental debt and what's termed debt held by the public. Despite its name, the majority of the debt held by the public isn't money owed by the public. Instead, it's the government owing money to various entities, including insurance companies, mutual funds, pension funds, and even other countries. This segment currently amounts to around $26 trillion. The question arises, how does the government end up owing such a huge sum to its people? When the government needs to secure funds, it does so by issuing bonds, which are essentially documents stating an obligation to repay a specified amount in the future. Alternatively, the bond may declare an intention to pay interest at specific intervals, with the commitment to repay the entire principal amount later. Bonds serve as formal agreements through which the government raises capital, establishing terms with investors for future repayment. If you've ever purchased a treasury bond, in a technical sense, the government is in debt to you. For example, out of the total $26 trillion owed by the government, they owe you $10,000. This is due to the fact that you directly acquired a treasury bond from their website investing $10,000. Essentially, by lending the government your money, you are entitled to receive interest payments in return. This scenario is an example of debt held by the public. Here's where it becomes particularly intriguing. The Federal Reserve, tasked with regulating money supply, settling interest rates, and lending money to the government by purchasing treasury bonds, categorizes its debt as debt held by the public rather than intergovernmental debt. Despite being a governmental entity, the Federal Reserve is also a private institution occupying a somewhat ambiguous space. Consequently, a portion of the $26 trillion that the government owes is attributed to the Federal Reserve. The reason behind this lies in the fact that the Federal Reserve is currently facing financial losses. When you come across funny memes depicting Jerome Powell running the printer, it's a figurative representation. The Federal Reserve's action of printing money is not a literal process. Instead, it involves the purchase of mortgage-backed securities and treasury bonds. Quite simply, they are expanding their balance sheet, often referred to as their portfolio. It can be complex, but keep in mind that whenever the Federal Reserve expands its portfolio or balance sheet through the purchase of assets like mortgage-backed securities and treasury bonds, it accelerates economic growth. This phenomenon is referred to as quantitative easing. This is exactly what the Federal Reserve actively participated in from early 2020 to March 2022. Throughout this time frame, there was a notable increase in the prices of risky assets like Bitcoin, tech stocks, and real estate, resulting in broad financial gains. The Federal Reserve played a crucial role by effectively protecting the market from potential failure. Investors seized upon this assurance, making substantial investments in contributing to the inflation of asset values. However, as the situation demanded a change, the Federal Reserve initiated the reduction of its portfolio by selling off assets. This approach is referred to as quantitative tightening. The current action of the Federal Reserve, as seen in the reduction of its balance sheet or portfolio, is a move aimed at slowing down economic growth. This shift is observable directly from the Federal Reserve's official website. However, here's why the FED is losing money. In the second quarter of 2023, the Federal Reserve held approximately $5.5 trillion of treasury bonds with a yield of 2% and $2.6 trillion in mortgage-backed securities with a yield of about 2.2%. However, the debt carried by the Federal Reserve was incurring a cost of 5%. In essence, while the money they were generating provided a 2% return, their debt was costing them 5%. The Federal Reserve was accumulating these assets when interest rates were low. And now, as they sell off these assets, they are not adding new ones to their portfolio at the current highest interest rates. This imbalance resulted in the Federal Reserve earning a net income of $88.4 billion in the first half of the year, but paying out $141.8 billion in interest expenses. This translates to a loss of about $53 billion in the first half of the year. If this pace continues, they are projected to double their losses by the end of the year. At the end of each year, if the Federal Reserve maintains a surplus, a practice it has upheld for at least a century, it allocates the excess funds to the U.S. Treasury. The Treasury, in turn, assumes the responsibility of using these additional resources to reduce the national debt. So why does this matter and how can it affect us? The significance of the Federal Reserve's financial performance directly impacts us because when the Federal Reserve incurs losses, it is unable to transfer funds to the U.S. Treasury. Consequently, the U.S. Treasury receives less money, leading to reduced funding for crucial programs such as retirement and Social Security. Additionally, there is a diminished budget for infrastructure projects like building roads and bridges, and less capital available for investing in the nation's future. A rational perspective on the national debt suggests that we should avoid printing money right away as a solution to all problems. It is also advisable not to bring the entire government to a standstill over issues like the debt ceiling. Well, that's about it for today's video. If you found this video helpful, do consider liking it and subscribing to the channel. Thank you so much for watching, and we'll see you on the next one.